Crypto Pirates Daily News, February 17, 2022. News headlines. Over 4,000 criminal whales control a total of $25 billion in cryptocurrency. Canada has frozen at least 34 cryptocurrency wallets used to fund the Freedom Convoy. According to Wells Fargo, cryptocurrency adoption will increase tenfold. On Twitter, you can now tip using Ether. The energy issue with Bitcoin is exaggerated. Over 4,000 criminal whales control a total of $25 billion in cryptocurrency. Criminal crypto balances increased from $3 billion to $11 billion, owing primarily to a rise in the cryptocurrency market in 2021, but also to an increase in hacks. According to new Chainalysis data, 4,068 criminal whales own cryptocurrency worth $25 billion. Criminal crypto whales, according to the firm, are any private wallet that holds $1 million or more in cryptocurrency and has received 10% or more of that amount through illicit addresses. In other words, not all of the $25 billion is illegally obtained. The data is a preview of Chainalysis' upcoming 2022 crypto crime report, and it follows similar, recent reports on ransomware, NFT fraud, money laundering, and malware. Two findings stand out in this report: the increase in crypto balances resulting from crime and the reasons for that increase. Illicit balances, funds obtained through illegal means, totaled $11 billion at the end of 2021, up from $3 billion at the end of 2020. That increase was due to a surge in cryptocurrency values in 2021, as well as a surge in the number of hacks that occurred this year, which also contributed to the amount of funds held by hackers following a hacking event, according to Kim Grauer, head of research at Chainalysis. Stolen funds accounted for 93%, or $9.8 billion, of the $11 billion in illicit balances at the end of 2021. According to the report, darknet market funds are followed by scams, $192 million, fraud shops, $66 million, and ransomware, $30 million. Of course, the seizure of $3.6 billion in Bitcoin last week as a result of the 2016 Bitfinex hack means that the $11 billion in illicit balances at the end of 2021 is already significantly lower for the time being. In 2021, there will be criminal cryptocurrency whales. Aside from the increase in criminal balances in 2021, and the extent to which stolen funds were featured previously and beyond other metrics, Chainalysis discovered that criminal balances fluctuated throughout the year. They were at an all-time low of $6.6 billion in July and a high of $14.8 billion in October. According to Chainalysis, these figures emphasize the significance of conducting cryptocurrency-related investigations as soon as possible. The fluctuations serve as a reminder of the importance of speed in cryptocurrency investigations, as criminal funds successfully traced on the blockchain can be liquidated quickly, said the analytics firm. Of course, the inverse is possible. Heather Morgan and Ilya Lichtenstein, who were both arrested earlier this month for allegedly laundering Bitcoin stolen during the 2016 Bitfinex hack, were not arrested until earlier this month. The stolen Bitcoin in question was worth $71 million at the time of the Bitfinex hack. It was worth $3.6 billion when the arrests were made. What is the number of criminal crypto whales? According to the analysis, 3.7% of all cryptocurrency whales are criminal crypto whales. These whales are typically sources of illicit funds obtained through darknet markets. Scams, which come in second, and scams are two other sources of revenue for these criminal whales. Surprisingly, Chainalysis was able to approximate the location of these criminal whales based on time zone. The time zones with the most criminal whales, according to the analytics firm, included major Russian cities like Moscow and St. Petersburg, as well as countries like South Africa, Iran, and Saudi Arabia. The ability to track criminal whales and quantify their holdings from a single public data set is a significant difference between cryptocurrency-based crime and fiat-based crime, Chainalysis added. In fiat, the wealthiest criminals use murky networks of foreign banks and shell corporations to hide their assets. However, in cryptocurrency, transactions are recorded on the blockchain for all to see, the company concluded.
Canada has frozen at least 34 cryptocurrency wallets used to fund the Freedom Convoy. Canadian authorities have ordered the country's regulated financial firms to stop processing transactions from at least 34 cryptocurrency wallets linked to the funding of the Freedom Convoy protests. According to a report, the Ontario Provincial Police and the Royal Canadian Mounted Police, in collaboration with the Financial Transactions and Reports Analysis Centre of Canada, have launched an investigation into crypto-based donations funding protests against Canada's vaccine mandate. According to the report, at least 29 Bitcoin addressees, 1 Cardano address, 1 Ethereum address, 1 Ethereum Classic address, 1 Monero address, and 1 Litecoin address have been listed on the order. On Wednesday, the list was made public via social media, and CoinDesk confirmed its veracity. The weeks-long protests, which sparked similar efforts around the world, have been declared illegal by Canadian Prime Minister Justin Trudeau's newly invoked Emergencies Act. Trudeau's use of the Emergencies Act, which had not been used since it was passed in 1988, allows banks and financial institutions to freeze accounts associated with the Freedom Convoy without fear of civil liability or the requirement of a court order. According to the report, after the GoFundMe account supporting the protest was suspended after receiving more than $9 million, donors turned to cryptocurrencies to subsidize the effort. According to the report, over 20 bitcoins worth more than $870,000, or 1.1 million Canadian dollars, were sent to addresses listed on the order.
According to Wells Fargo, cryptocurrency adoption will increase tenfold. Wells Fargo has taken notice of how far the crypto world has progressed. It now predicts that adoption will more than tenfold in the coming years, and it believes that crypto is still in its early stages. Wells Fargo believes that cryptocurrency will grow in popularity. He stated in a statement, "Looking at technology investing in the mid to late 1990s seems reasonable for today's investor trying to determine whether we are early or late to cryptocurrency investing. The internet was in the midst of a hyper-adoption phase at the time, and it hasn't looked back since. Cryptocurrencies appear to be in a similar stage today." Wells Fargo, in collaboration with digital exchange Crypto.com, has released a report estimating that there are currently more than 220 million crypto users worldwide. This equates to just under 3% of the world's population, so while the figure may appear large at first glance, it demonstrates how much more room there is for the digital currency world to grow. The report explains, "It only took 4 months to double the global cryptocurrency population from 100 million to 200 million. If this trend continues, cryptocurrencies, like other technologies, may soon exit the early adoption phase and enter a hyper-adoption inflection point. There comes a point when adoption rates start to rise and don't stop." Aside from precise numbers, there is no doubt that global cryptocurrency adoption is increasing and will soon reach a tipping point. At the same time, The report implies that it would be foolish for anyone to enter the crypto trading space without first conducting extensive research. It claims that many digital assets are still maturing and in their infancy. As a result, there may be issues with these assets in the future, and traders must be patient as all of the kinks are worked out through future regulatory tactics. Recently, the crypto market appears to be experiencing bearish trends. While Bitcoin is back in the mid-$40,000 range, a significant improvement from the $37,000 and $38,000 it was seeing just a few weeks ago, the numbers of today are nothing compared to, say, what traders saw in late 2021. During that time, Bitcoin was trading at a new all-time high of around $68,000, and Ethereum had also risen above the clouds. Things aren't so bad. Even so, not everyone believes that all hope is lost. Andras Ivan, an analyst at BrokerChooser, explained in an interview. Even though the current crypto trend appears bearish, we must remember that the structure of crypto investments has changed significantly since the previous peaks at the end of 2017. The market cap is now significantly higher, and institutional investors have joined in the last 1 to 2 years. That could help the market avoid the severe drops and waning interest that we saw during the crypto winter of 2018 to 2019.
On Twitter, you can now tip using Ether. Twitter adds Ethereum support to its virtual tipping feature, months after adding Bitcoin support. Twitter TWTR, -2.00% announced on Wednesday that it is expanding its mobile tipping feature to include support for Ethereum, 0.42%. Twitter's tip service allows users to send money, including cryptocurrency, to accounts they like via the Twitter mobile app. In September 2021, the social media behemoth began accepting Bitcoin, -0.05% tips. We're continuing to expand ways to get paid on Twitter, including more options for creators and fans who want to use crypto, said Johnny Winston, Twitter's lead product manager of creator monetization, in a statement. We're thrilled to allow anyone to add their ETH address to tips. It should be noted that it is unclear whether Twitter tips will support other Ethereum blockchain tokens, such as ERC20 tokens and stablecoins, or only Ether. Twitter's announcement demonstrates the company's interest in cryptocurrency and blockchain technology. On Thursday, Twitter began allowing some users to use their non-fungible tokens, or NFTs, as profile pictures, which they began doing earlier this year. A non-fungible token, NFT, is a certificate of ownership for a one-of-a-kind digital asset that is not intended to be exchanged.
The energy issue with Bitcoin is exaggerated. Bitcoin has a slew of outspoken and effective detractors. Initially, Bitcoin was a scam. Now, the Bitcoin, BTC, currency is likely to become one of El Salvador's national currencies. Then it aided criminal activity, but money is still a lawyer's best friend. Another flimsy argument advanced by a small but vocal minority is that it is an environmental scourge. Finally, emissions can be traced back to the use of fossil fuels. We don't outlaw cars because of their emissions, instead, we power them with cleaner energy sources. Bitcoin is following the same trend towards cleaner energy production. Many people want to despise Bitcoin, but their causes are running low. Bobby Lee is the founder and CEO of Ballet, a cryptocurrency wallet company, as well as the author of the Wall Street Journal best-selling book The Promise of Bitcoin. The concept that Bitcoin is contributing disproportionately to the current international environmental disaster is currently the most widely disseminated piece of misinformation about Bitcoin. Genuine public concern about climate change and environmental security is being exploited by those who are deeply entrenched within the outdated financial system, such as Bill Gates, Warren Buffett, and Charlie Munger. On the ground, the Bitcoin-induced local weather change speculation appears logical. Electrical energy is required for computer systems to operate. Because Bitcoin is a globally decentralized community of thousands of computer systems, it consumes a significant amount of electricity. As BTC becomes more useful, the amount of electricity consumed to secure the network is expected to rise proportionally. Enhanced comparability of vitality data. Nonetheless, critics, such as Trinity College Dublin's Professor Brian Lucy, point out that Bitcoin alone consumes the same amount of energy as a medium-sized country. It's a scumbag business, and it's a scumbag currency. These arguments, however, are based on skewed data and deceptive comparisons. According to Digiconomist's analysis, one Bitcoin transaction consumes the same amount of energy as 453,000 Visa transactions. However, we must keep in mind that bank card payments continue to rely on current, emission-heavy infrastructures such as ACH, Fedwire, and SWIFT, as well as the United States military and diplomatic power. The critics' calculations comparing Bitcoin and the traditional banking system do not include these emissions. It's the equivalent of calculating the carbon footprint of your entire espresso trade with a single cafe. Without a doubt, when we consider these overhead emissions, a singular reality emerges. According to Galaxy Digital's most recent analysis, Bitcoin consumes approximately 113.89 terawatt-hours per year, while the banking industry consumes approximately 263.72 TWh per year, which is more than double. Instead, we should consider the environmental impact of the banking system from which Bitcoin is about to transition. Modern banking uses a lot of energy to power thousands of economic office buildings and local branches, thousands of employees' daily commutes, and billions of customers who must travel to and from physical financial institution locations for service. Bitcoin will significantly reduce demand for traditional banking companies, thereby reducing the environmental impact of that trade. Bitcoin consumes a lot of electricity, but we must look at the power sources to fully comprehend the situation. According to a recent survey conducted by the Bitcoin Mining Council, 56% of Bitcoin's electrical energy consumption is derived from clean, zero-carbon emissions, sources of such vitality, which is the same price as every other major trade. In the United States, only 40% of electricity is generated from renewable sources. Bitcoin's vision is fundamentally distinct. Nonetheless, in an atmosphere of climate fatalism, environmental arguments will always have sway over the less informed. When people are convinced that Bitcoin is a threat to their survival, they will believe they have no choice but to stay trapped within the fiat system. Bitcoin offers a fundamentally distinct vision. Its deflationary value encourages people to save for the long term rather than spend for the short term. In essence, the shelf life of capital under the Bitcoin system is significantly longer. BTC's worth has increased by more than 100% per year on average, and this rapid growth is anticipated to continue for a long time. Bitcoin imposes a colossal alternative price on unnecessary consumption. When people's money isn't constantly being eaten away by inflation, they have much less incentive to buy the most recent shopper product. Purchasing an iPhone now makes much less sense given that these funds will almost certainly be worth more tomorrow. Small, voluntary changes in individual behaviors similar to these could be compounded throughout society, with the combined impact being transformative. To protect the environment, it is not necessary to sacrifice liberty and prosperity. Bitcoin's detractors will continue to scrape the bottom of the barrel in search of new ways to dismiss this revolutionary technology. While instilling local weather fears is the most recent rhetorical tool used by cryptophobes, it is important to remember that, like their other half-baked arguments, the local weather objection does not stand up to primary scrutiny. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.